April live cattle 55 cents lower at 121.67. Oliver, that's 80 cents off our earlier high today. What does that all mean?
Well, a lot of volatility in the outside markets, and at the lows for some of the indices, we're down to 2.5%, and generally that leads into a little bit of weakness, or at least puts a little bit of a headwind into some of these livestock markets, specifically cattle. But all in all, cattle are holding in there pretty well, and we remain upbeat on them. We talked about our support pocket, 120 to 121.25 for the last several weeks, as being a buying opportunity in our eyes. This was the breakout point from January 22nd, and believe that offers some value. As far as the cash side goes, not a whole lot of action, but we're starting to hear some signs that we could continue to see that creep up a little bit higher. So that has us still optimistic about the fundamental backdrop here going forward. But again, need to defend 120 to 121.25 to keep that momentum to the upside. Now, one of the markets that's just been resilient to the upside is that lean hog market. We were limit up yesterday. That gave us expanded limits today. We're not utilizing those expanded limits, but my gosh, what a move. And we've been optimistic livestock for the better part of the last 2.5 months on the idea that fund participation is going to continue to ramp up. But this hog market probably needs to cool off a little bit. And don't confuse that with being bearish. I just think a healthy market needs a healthy, slow and steady stair step higher as opposed to a moonshot higher, so to speak.